Hello, everyone. I'd like to welcome you to today's Gains webinar, Redefine, Reset, and Right-Size Your Inventory for Success. I will turn it over to our Gains co-founder, Bill Benton. Bill, take it away.
Thank you, Anna. And thank you all for joining. We appreciate your time. Hopefully can give you some insights today on managing volatility, in particular as it relates to working capital and fulfilling your customer commitments with optimized inventory. So I have two distinguished panelists here. I have Lora Cecere. She's the founder of Supply Chain Insights. Lora's also well-published in Forbes magazine and was former supply chain lead at AMR Research that's now part of Gartner Group. I could go on, Lora. I'll stop there and just say that she has orders of magnitude more LinkedIn followers than the rest of us combined. So, Lora, it's really nice to have you here with us. Thank you.
Thank you, Bill.
Yeah, pleasure. I'm Bill Benton. I'm the co-founder of Gain Systems. I've been working on supply chain planning and optimization throughout my career, over 30 years here, working with over 500 companies, ranging from small to Fortune 100. So my focus has really been on inventory optimization and demand planning. I'll segue to my colleague, Jeff Metersky. Jeff has over 35 years of experience, both on the solution side as a co-founder of Chainalytics, as well as leadership positions at companies like i2, Lamasoft, and OptiLogic. So Jeff also brings industry expertise, having worked at GM and IBM. So we're very excited to have him not only here, but on the team going forward. So Jeff, thank you.
Thanks, Bill.
So we're going to start out with the poll question. We're going to ask you to answer this while Lora begins speaking about her next set of content here. But if you can rate on a scale of 1 to 5, 5 being extremely well, how do you believe your company performed against your 2022 inventory goals? So while you're completing that, Lora's going to tell us a little about some of the fascinating and, I guess, slightly depressing research that she has on what she's seen. So, Lora, please.
Well, thank you, Bill. I've been an industry analyst for 22 years, and the number one question I get is, how can I reduce inventory, or why can I not reduce inventory? And, if you look at the data, which comes from the public balance sheets, you can see that on average across all industry sectors, we've added 27 more days of inventory when compared to the beginning of the Great Recession in 2007. And for most people, this is a surprise because 92% of companies have an advanced planning system, 96% have an enterprise resource planning system, often called ERP. Many of these systems were implemented with the promise of reducing inventory, but people aren't able to reduce inventory. And so the question is why? And the answer is things have changed. We have longer lead times in many of the industries. The longer the lead time, the greater the inventory, because many people are not considering in-transit inventory. The second thing is the more nodes I have, the greater the inventory, and with 38% of manufacturing outsourced, that's added a node, and that's also added, in-transit inventory, and many people aren't considering that. The other thing with the rise in product complexity, often called the long tail of the supply chain, where I have many items which have low volume and high volatility, each of those items bring in a disproportionate need for inventory because the volatility is so high, but the long tail of the supply chain also drags cycle stock and increases it for manufacturing. And cycle stock is the amount of inventory that I need to hold to cycle through the production schedule to go from the beginning product to the ending product. And if I have reduced my capacity or I've focused on asset utilization, typically the cycle stock needs also increase. So many companies have focused on return on assets, decreased capacity, added complexity to the product portfolio, and that adds to inventory. The other issue that we have is volatility, both demand volatility and supply volatility, and it's unprecedented. If you look at the global pressure index for volatility in the supply chain, it's about 3 times what we had at the end of the Great Recession. And so many times people have implemented advanced planning systems and they've kind of set it and forgot it, not really looking at how do I really redo these for changes in lead time and planning master data, or how do I make sure that the optimization engines are really working with this heightened variability. So I hope that helps, Bill.
It does, Laura, and you've both written about and mentioned the need for many companies, or their perceived need, to move out of these systems and into Excel for a lot of their core decision making because of that switch from relative equilibrium to a much more volatile set of conditions on both ends, demand and supply. So what have you seen? Like, I think I recall seeing very high proportions.
Right. In the early stage of the pandemic in March 2020, I did some qualitative interviews, and I found that 94% of companies that I interviewed had actually gone to Excel because history was not a good predictor of demand. And, you know, historically, our practices for demand planning have always assumed that the order patterns and shipment patterns from the prior years would serve as a good proxy metric to go into optimization engines to deliver results. But in the pandemic, when demand really changed and people shifted from buying services to buying products, people were caught on the back foot because those traditional demand planning solutions and approaches were not sufficient, and they tried to go to Excel spreadsheets. 94% of the decisions were made on Excel spreadsheets, but it's just impossible for the modeling that needs to happen on demand and supply variability. And Bill and Jeff, you know this really well because, you know, you do it every day, to do that modeling on Excel. So I think we have a need to rethink our processes. You know, the order is not a good proxy for demand and high variability. I need to use channel data. And I also need to continually test the optimizers. I laugh that we wouldn't run our car years without taking it to the shop, but yet people don't really sit down and backcast and test the optimizer to be sure that they're getting a good answer. And so I encourage people to question what they're doing and to test using forecast value add to see if they're getting an improvement.
Thank you. If we have the poll results from the first poll question, see these, okay. Looks like the 2 leading contenders are the second and third questions. So that's, if you could go back one slide, we can just show everybody those rather than just speaking about them. So let me look at the questions again, excuse me. So those related to executives understanding the supply chain. So Lora, you've written a lot about that as well. And then additionally, the volatility of demand and supply planning. So thank you for that. We're going to segue to the next poll, please. So here, this is a check all that applies. So we're looking at your view in the audience here of what you think are the factors that you anticipate having a very large impact on next year's inventory performance. So if you could comment on these, please do. We'll go ahead and segue to the next slide, and then we'll review this poll question when we're finished. So Laura, you've talked about the form and function of inventory, and you alluded to that earlier when you started talking about cycle stock and in transit, et cetera. But if you could expound on that a little bit, because I think this is an underappreciated concept. Everybody just thinks of safety stock, which of course is an important element, but just one of many. So thank you. Please Please describe this for us a bit.
So 2 decades ago, I had the job of being product manager for inventory planning for an advanced planning solution. And we were very focused on safety stock, primarily using the input of demand variability to write into distribution requirements planning the safety stock requirements. But as I've done research on inventory and I look at inventory, and if I take a manufacturer's inventory and I break it into buckets of how much is safety stock, how much is cycle stock, how much is in transit stock, how much is seasonal or promoted stock, you find that safety stock is typically 20-25%. And what has happened is the increase in the need for in-transit inventory due to longer lead times, higher variability, primarily on ocean shipping, and the need for higher cycle stock due to the decrease in capacity and also the elongation of the long tail, and the fact that companies don't do a good job of managing product complexity, platform rationalization. So as I studied this, I said, we need to really design the supply chain because inventory is our most important buffer. And we need to understand the buckets of inventory and the role that they're playing. And so when I work with companies, I say, let's look at variability. And for each product, let's ask the question, what form should inventory be held in? Because the higher the variability, the more I need to push back in the supply chain, holding raw materials and work in process, and have postponement strategies to be able to be responsive, knowing that I'm not holding finished goods. And in the management of the inventory, using advanced planning and the network design tools, I need to focus on how do I manage these buckets of inventory and the choices that I make, because often people will outsource either manufacturing or they'll outsource with a third-party logistics provider, but they don't look at the implication of what that does to in-transit inventory or the movement from an on-the-road shipment to even a container on rail can cause a major increase in-transit inventory. So I would encourage people to take their inventory, do this analysis, look at it over time, and to use their advanced planning tools to say, what should the targets be for each of these types of inventory, and how do I design the inventory so that I have the right buffer on form and function of inventory?
And Jeff, feel free to comment here as well. One thing I wanted to note is Gaines' multi-echelon inventory optimization looks to formulate the optimum balance, and the complexity here from a number of combinations is nearly infinite. So there's a lot of simulation and near optimum decisions to be made. I know we've talked a lot about raw materials and other elements that would relate more to production and manufacturing, but as you look at distribution, wholesale distribution, you look at retail, you have the same sort of complexity, but then the echelons generally go down through 2 to 4 levels of distribution all the way down to point of sale. And how do you optimize across that? Jeff, you want to comment on that?
Yeah, and I think Bill, it goes back to some of the earlier things that Lora was saying as well. I mean, one of the kind of takeaways for me as I think through my career and I engage and interact with customers is that we've relied this notion that our designs have changed, right, or the needs to change our designs. I don't think that companies fully appreciate and understand the impact to inventory, right, that's associated with that. It's usually even done a lot of times at a very aggregate level, and we don't get very granular down to the individual SKUs that are moving through the network when we make these design decisions. And so it's getting, into that mode of I can use the same technology to operate and plan my existing network, but I can also use it to design and to check policies, right, and to check implications. The other thing that I would say is a takeaway, kind of tying together some of the things that Lora had brought up, is we just don't generally do enough scenario planning, right? We don't understand the range of possibilities of what can happen to us. We kind of typically take while we know there's variability and some of the technology, like ours does a good job of understanding variability of supply, variability of demand, but it's still kind of a one-time shot, right? It's not sensitizing over a range of possible outcomes or a range of possible inputs. What could I see coming to me? And the more variability I have, I would argue that the more we should be doing more scenario planning. We should be doing more ranging of understanding, right? And some of the future things that we're looking at Gaines is how do we get to more into probabilistic planning, right? As we move forward in time, that it's not this stochastic, deterministic view of the world to plan around, and then it's changing so rapidly on us that we're just chasing our tail, right? And so we've got to kind of get out of that mindset.
And Jeff, let's just define what deterministic and stochastic mean, because a lot of times probabilistic people don't understand what that means, to go from looking at this as a number to looking at it as, a range or a variable. So what are you working on at Gaines on probabilistic forecasting?
Yeah, well, it's the probabilistic forecasting part is, what is the range of possible outcomes of what the demand can be, right? So if you're trying to say, what is my confidence, usually you say my forecast is X amount of demand of this SKU that's sitting at this location. But that's not enough to understand that number. It's sort of like, what's the likelihood that it's going to be that number or plus or minus X around that, right? And if I actually miss that targeted expected value, what does it mean to me and how do I respond and react to it? I think a lot of what we're trying to do, Lora, is not as, and Bill can clarify this, but not only on the forecasting or demand view of it, but it's really also on the supply side, right? So a lot of what's driving inventory is having a better understanding and predictability of the lead times, right? And trying to get ahead of kind of lead time sensing as my lead times seem to be changing. Not wait till they change, but we're doing work right now, and we're doing this with a couple of our customers. Can I get ahead of looking out of, I see almost like it's demand sensing, I'm doing lead time sensing. And can I actually predict that my lead times are changing and they're changing significantly enough that I need to now alter my plans, that I now have to actually change my inventory policies. So I think, we've seen a lot of other companies focus on how do I do a better job of probabilistic demand planning. So we think, a lot of what drives inventory, especially recently, right, is the notion of understanding, how can I sense changes in lead times, whether that be transit times or my vendor compliance or adherence to schedule, we're seeing some really early wins that are coming from some of our customers that's making a significant difference on right-sizing their inventory.
And I think that's great because only a third of companies have what-if analysis, and 85% are only looking at demand variability, not supply variability. And they've set up their supply chain planning systems with a lead time, and often it's the lead time that was there when they set up the system. They don't really adjust it or look at the probability or the range of what's happening on lead times. And, with 20 to 30% of the containers going to be pushed because the ocean carriers are working on filling up the ships with lower demand right now.
Right.
The lead time analysis is so important.
Yeah. Yeah, and it's even interesting. I mean, just one quick anecdotal, and then I know we got to move on. But I mean, there's also this trade-off of exactly on that ocean container filling it up, and it depends on the coast. The trade-offs between the ocean transportation cost, the cost of goods themselves, but really trying to understand the frequency of if I'm shipping that stuff in more often, right? What does that do to my inventory levels? And so having that ability to understand that, maybe it makes sense to load up the containers, but maybe it makes sense to ship them more rapidly, right, as they're coming in and be more responsive. I think especially with longer lead time items, the more we enhance or we lengthen out that lead time by having to fill up containers, these companies are less responsive and reactive to the demand signals that they're seeing. And so there is this total trade-off that goes on between all of it that we don't do enough work at.
Yeah, which is great because the ocean carriers are going to be pushing those lead times even more as these growth numbers start to fall with the recession.
Yeah.
So, Bill, it looks like we got a poll.
We do, yeah. So it looks like a majority of respondents found 3 of these to be likely highly relevant or have large impacts next year. Number 1 of which was supply-demand challenges. So I think that's quite consistent with what the 2 of you were just discussing. And I'll mention a quick anecdote. Is visiting one of our larger customers, Fortune 500 company yesterday, and they're seeing items that had average lead times of 13 to 20 weeks coming in 5 weeks. And that working capital surge is really challenging, right? But their suppliers who are seeing their capacity utilization decrease are looking for order to cash, right? So they're suffering a bit from that. So it's going both ways, right? The bullwhip effect was largely increasing lead times last year. Now we're seeing a lot of the opposite in some cases. Second most relevant was number 5. So Lora, I think that organizational alignment around inventory policy, just a side note to the audience, when we were talking about what should we pull on this, right? There's 100 items you could put in here. And Lora, you emphasized this, and I just want to acknowledge that this is a huge issue, right? And most of the respondents are seeing that.
In my research, Bill, I test a lot of things, and organizational alignment, particularly between finance and manufacturing, procurement and manufacturing, and sales and operations, is the number 1 driver of inventory control and resiliency. And most people don't work on that. They're working on functional metrics, or they're working on, some kind of new shiny object. And it's such an important area.
Understood.
Lora, I'm just curious. Oh, I'm sorry. Go ahead, Bill.
No, please, Jeff, if it's up.
I was going to say, Lora, on that one, I mean, what do you find, I mean, which part of the organization is really like driving this lack of alignment? Is it more predominant in one area than another, or it's really kind of shared between all the different functions?
Well, it stems from number 1, executive understanding of the supply chain. But over the last decade, what happened is IT and procurement started moving under finance. And most of the financial decisions are made inside a lead time, not outside a lead time. And so when we're making our bets on inventory, we've got to look at lead time, and we've also got to look at constraints, and we've got to look at a feasible plan. So the understanding of finance and the chief operating officer as the shifts have happened are a tough slog for a lot of organizations.
Yeah, that makes sense. And I mean, I would propose, I mean, I've seen very similar things. And then when trying to get the understanding, I think there's just this need to understand what inventory has to the impact of the rest of your P&L, right, and your financial performance. And if you start tightening that number down, start tightening that working capital investment down, what does it really do to me, right? And to model through that. And I don't think that enough of the financial community truly understands what happens when you kind of ratchet down that working capital requirement and keep on pounding that down, what the impact is to the rest of the entire business associated with that.
Well, and, inventory has a lot of tension. It's your most important buffer. And most of the time, the financial organization does not understand the need for the buffer. And they don't understand the impact of constraints and what a feasible plan is, but they want to reduce cost. And so the most effective supply chain leaders can help in driving that discussion about buffers and use tools like yours to show what's required for a buffer, and also be very proactive about what part of inventory can we manage to decrease waste. And so understanding that tension between the buffer and the waste is a really key role for the supply chain leader to bring the financial organization under the tent.
Thank you.
That was great.
Yeah, and then just to be thorough, the other one that a majority answered yes to was inflation, which is probably not shocking. The couple things before we segue to the next slide, or as you segue, if you could, please. So some tactics and bringing in probabilistic planning is how do you hedge, right? Like, okay, we know that this range is broad, right? We could go from 1/3 of demand to double our likely demand, right? What does that mean? Well, if there's a lot of downside risk, you might want to rationalize your SKUs. You may want to stock only higher in the distribution channel. You may want to expand postponement strategies where you're holding more raw and semi-finished than fully finished product. So there's things tactically within games that we do based on how broad that probable confidence interval or range of outcomes are, both on the demand and the supply side. So executing hedging strategies based on inventory and multi-echelon inventory can be very effective to help action some of that, right? So part of it is knowing what those scenarios are, and part of it is acting on them. So as we segue here, we talked a fair bit about, and Jeff gave some good examples regarding lead time sensing. So we just wanted to give an example here. And at Games, we believe in pragmatic machine learning. And what that means is it needs to be deployable without an army of decision scientists. And the outcome has to be understandable or it won't be used, right? People will override the results or simply not apply them. So as you look at this particular chart, this is showing us what's called feature importance. So feature is simply a piece of input data into a machine learning model. So as you look at the purple box, the alternative prediction, right? That's the current means of determining lead time. Lora mentioned in some cases it's a static value, right? It may not have changed since you first set up the item master record. Within Games, we look at the preceding observed lead time. So right now in 2023, we'd be looking at 2022. You can see here in the size of the box here, it's called a leaf in this particular type of tree map diagram, that leaf is much smaller than simple things like percent of orders filled complete, right? So when a vendor is typically late, that's a good indication that they're utilizing a lot of capacity or overcapacity. And conversely, when they're filling things on time or early with a high degree, often their capacity utilization is lower and they're going to probably see declining lead time. Some other things that get pulled in and are things like vendor latitude and longitude, right? So by de facto, it's trying to look at regional impacts on lead time. So the net of all this is these large models and using what's called XAI or explicable AI to tell you here's how we came to the number. We can reduce lead time error by a third, right? And that can be very relevant, both if it's declining, which we're seeing a lot of, direct working capital, and obviously if lead times increasing to make sure you have the right buffers. So wanted to give that one example, and then wanted to segue to Jeff. Jeff, you talked about, how design needs to be a recurring theme and scenario planning and outcome assessment. Could you talk about that? Both, you mentioned that that's usually periodic. What about that in like a continuous and sort of fluid decision-making process?
Yeah, I mean, I think many times, we need to kind of take a step back and talk about kind of different types of design activities. Many times people think about design as that periodic infrastructure play. I'm going to restructure my network. I'm going to look at adding or taking away capacity. I'm going to look at changing my facility locations or my strategic sourcing. But there's always opportunities to be continually evaluating flow, right, inside the network and in assignment of how things are moving inside of that fixed infrastructure. And so as things like lead times are changing, as costs are changing, as movements between different modes are changing, there's these opportunities to rebalance my network from assignment and service territory perspective, right? There's also an opportunity as products are going through their life cycles, right? So what I do in a finished goods distribution network, for example, when I'm launching new product into the market is going to be different than when my product reaches kind of that stable mature, or I mean, on top of, what is the state of the world of my products as they go through my life cycle will also alter where I stock them, right? And if I alter how I'm stocking them, that's going to have an influence on the amount of inventory I need to hold. So while I might see high levels of variability during launch, I might see lower levels of variability as I start getting mature and stable. I get into my end of life and I have variability again, and I'm now more sporadic. I shouldn't I may not keep my product stocked in the same way that I did in the past. I may now want to alter that. And so at Gains, we want to be able to provide our customers with that capability of monitoring that, right, of having that understanding in a proactive fashion as costs are significantly changing, right, as demand patterns may be changing, as lead times are changing, as your product life cycles are changing. What should I do to change the design so then I can then leverage planning against that new design as we go? So it's not always about that big infrastructure play. You absolutely need to still do those things, but this is more of that continuous design look that would then influence ultimately inventory levels at the end of the day, which is what we're talking about.
Yeah, and Jeff, one thing you've taught me is to be sensitive to the fact that it's one thing to redesign and optimize the design of the supply chain. It's another thing to enact it, right? So these organizations, moving locations, obviously, but even just warehouse configurations is challenging. So doing those are going to remain periodic because of the switching costs. But the continuous element could be a small Pareto, right, where you're optimizing a small portion that might represent
it might be a big return. Yeah, and I think the key part, that we see that we're helping customers with also is the transition planning, right? I mean, it's one thing you're in the middle of operating, our customers are using our technology to plan, but then they want to change to a new configuration or a new assignment, and now you have to transition, right? How do I start buying into new locations? Do I transfer inventory in the network to that new location? So it's more than just setting up what should I do? It's also helping, understanding how do I get from point A to B. So you can point them to B, but then we also are helping our customers figure out what's the right way to get to B, right? It doesn't make sense to get to B, and lots of times it doesn't because the transition costs far outweigh the future run rate of the operating costs. So you set those aside, and then you kind of go on to the next one.
That's a great call. Thank you. I think we're moving on to the wrap up and Q&A, if we can go to the next slide. So I would invite anybody who hasn't asked a question here to please post one. There's one here that I guess could go to either or both of you. But the question is, what one or two tactics or strategies have you seen that have been highly effective to help optimize inventory? I'm sure we've hit on some of these, but any examples or concepts, one or two of them? Lora or Jeff?
I think the most important thing is to design inventory strategies, looking at demand and supply variability, and to have that as a step in sales and operations planning. The most mature companies in S&OP focus on the ampersand and not the S and not the OP, but, how do I really align buffers and make sure that I've got the right form and function of inventory. So that's where I would place my bet. Jeff, your thoughts?
No, I would agree, and I'm going to come back to something we already brought up, but to reemphasize that it's not a static exercise. These policy parameter settings are something that needs to be evaluated on an ongoing basis to understand that if my environment has changed around me, then I need to do something to change those policy parameters that then drive my operational activities. And I feel like not enough companies feel about that as a continuous process. It's more, periodic and static, and at times gets very stale, right? And then everything kind of atrophies over time.
Right.
Ditto all of that. One other thing that we've seen that's been effective is start something now and iterate, right? So continuous Pareto. So don't let having to solve policy for every product prevent you from starting for some. So I was an example of this is one of our customers has 20% of their SKUs accounting for 85% of their sales, but only 30% of inventory. So rather than wrangling with sales over how to fine-tune that 30% of inventory that's on the bread and butter that comprise most of their sales goals, how can you optimize that long tail of items, right, where it's most of the inventory, and a small portion of the sales. And so there's ways that you could look at this by how culturally achievable it is, how technologically achievable it is, and as Jeff mentioned, where the transition costs are manageable. And one of the things that we've done as well at Gaines is provide optimization as a service. So sometimes it's just about in-house tools, expertise, or time to do this. So you can do this in phases. And one of the things we do is help you accelerate at least phase one, maybe it's phase forever, by providing some of these as a service models, which I think is newer. Jeff's talked about as an expert in design as a service. So we talked about some of this. So being creative, right? What can I do internally with existing tools? What new tools do I need? And perhaps bridging the gap by using outside expertise as well.
And Bill, and as you're saying that, we'll get to a couple other questions, but just one thing that I just kind of realized for myself we didn't really talk about as a strength that I think falls in line with this question is the notion of your service level strategy. Right, just trying to understand, where are you at with how you've decided? Are you kind of on the simplistic? I've done an ABC based on velocity, right? Or am I looking at other dimensions that are in terms of margin? Am I looking at variability? Like, am I looking to criticality of market baskets that go together? But when you think about how to set your service level targets, and at the end of the day, what does that do to the level of inventory that you're going to have traded off with your lost sales? Right, there's sometimes significant opportunities that exist in there as strategies to reassess that service level strategy. You get the push of sales is at 100%, right? And we know that that's just not pragmatic, right, from an inventory level. But I don't think enough companies are actually looking at revisiting their service level strategy that's driving that inventory profile, right, and the amount of inventory that we need to hold. So I throw that as another one in the mix of potential strategies to reevaluate.
Great, thank you. Any other comments on strategies for excellence before I segue to our last question?
So one of my favorite techniques is to take a cross-functional team and to look at them last year and to look at when did they short orders and why, and what inventory did they write off and why, and what happened, and how could they improve it, right? Where's the data? I'm amazed that companies don't use their own data. I'm amazed that companies don't really do the analysis of forecast value add and understand bias. I'm always amazed that we're not designing the form and function of inventory. So that kind of after-action review of either a year or a quarter cross-functionally is usually extremely healthy. But you've got to have the boundary of, nobody's going to be defensive. We're in this together. And often people will find that functional metrics or people driving manufacturing OEE or, really driving transportation lowest cost looms its ugly head, and we've got to deal with that, right? And we can't get at it unless we have that cross-functional discussion.
Great point. And take it from the system performance, not the individual functional performance.
Exactly.
Yeah. What else you got for us, Bill?
I think just one more here, which is, can you give any examples of specific initiatives that have been successful that you can think of? I know, Lora, to your point, I might guide this a little bit. When you talk about sort of root cause analysis, right, of where am I overstocked, where am I understocked, what processes failed, et cetera. One thing that came to mind, and Lora, this came up at your conference back in September, is this idea of discrete event simulation. Right? How can you go back and understand, had we done things differently, how might outcomes have changed? So maybe comment a little bit on that, and then Jeff, if you had an example of that might be really helpful. I know you've worked through that. You're an expert in that area.
Well, I think one of the great case studies is Americare Royale, which you guys worked on, which really looked at, the design of form and function of inventory and a long lead time product. And I would encourage people to go look at that case study, which was, a simulation using inventory optimization to be able to do just that, Bill. And, when I first talked to them, they didn't have a clue what discrete event simulation meant, and they used it to educate the executive team and align finance. And, these techniques of discrete event simulation, what-if analysis, are useful to get an answer, but they're more useful to drive alignment.
And education, right? Because I think going through that, you learn the levels. Yeah, Jeff, did you have a comment?
Yeah, and I mean, I think it's that was kind of that was a joint relationship, right? That we kind of delivered that with my former employer and Gaines, right before I came to Gaines. But I, wholeheartedly, the notion of operational feasibility of designs, because sometimes you're in this optimization only world that we've used for so long that you can't really see at the granular level of detail of how the supply chain will operate, right? And you can't test as much policies. And so it's really important to understand kind of that customer service policy. How are you going to deliver orders, right? Are you going to back order, not back order? Are you going to ship from alternative locations? I mean, those are all policy decisions that I term, that's design, right, in terms of that policy. But understanding how the network will really operate day by day by day based on these design decisions, watching how inventory is growing and going down, testing should I fully load, containers or not. I can't speak highly enough about it. I think it's one thing. I mean, I'll get on the general industry soapbox. As an industry, we just have underserved our customers on not bringing discrete event simulation to the table as part of the toolbox to help do these design decisions that ultimately lead to policies that drive our planning solutions. And so it's kind of bringing that all together is where we intend to drive is Gains. And that's some of the work that we're doing right now.
Yeah, and I think our collaboration there is to try to help bring world-class planning, not only to other members of the Fortune 500, but also bring that to the upper mid-tier and mid-tier, right? So how do we democratize that type of analysis, discrete event simulation, education, and alignment amongst executives? So excited to keep pursuing that with you.
Absolutely.
This is great. So I think that's the last of the questions. We're going to encourage people to, as they sort of absorb this a bit, to follow on with any questions. But Anna, if you'd like to wrap up, I think we're at the end here. It's been great. Really appreciate it.
Sounds good. Thank you so much to our presenters. Have a great rest of your day. Thank you, everyone.
Thanks all. Thank you, Laura. Thank you, Jeff.
Thank you.